Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening and welcome to the Smartkarma Weekly Forum. Just a quick reminder, the forum is a high-impact weekly live webinar. It's exclusive for Smartkarma Plus subscribers, and we use the forum to discuss some of the best, highest conviction insights surfaced across the Smartkarma network. The forum typically lasts 10 to 15 minutes. It's rapid fire in nature. We allow you to ask questions using the Q&A button on your Zoom applications, but you can always follow up later on the platform itself through discussions. Our customary disclaimer, the forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies to all our forum contributions. So please do not share this on social media or public forums without express permission. Every week after we end the forum, we try and upload a recording of the forum on our YouTube channel. You can find it under Smartkarma Plus Weekly Forum. You can use this to catch up with sessions that you might have missed. And you can also use this to share ideas with friends and get their opinions and feedback. Today, we will look at 3 ideas. We'll kick off with a very interesting small cap in Indonesia. We will progress to a mid cap in China. And lastly, we've actually changed the session a little bit. It won't be graph tech, but we will be looking at Kirin Brewery in Japan. So let's kick off with Arwana. This is a small cap, as we mentioned. The market cap is just under $500 million US. It is a name that we have covered very, very well on Smartkarma, and Angus McIntosh, who previously used to head up sales for Merrill Lynch in Indonesia. He's the analyst who covers this name closely and is also in great contact with the management. So let's take a quick look at the thesis. So Arwana, for those of you who are unfamiliar, it's a leading low-cost ceramic tile manufacturer. So this is what you put on the floor in buildings. It is also the 9th largest tile manufacturer in the world. It is a very, very high quality company. And as it's mentioned in the first bullet point, it's one of the lowest cost manufacturers globally. It had a terrific 2021. It grew its profits by 46%. It continues to have a very high efficiency rate, and it continues to increase production to keep up with the structural demand that we see in the Indonesian market. Now, going forward, we are very positive on Indonesia's real estate cycle, as well as the infrastructure build cycle. And both of those cycles in return bode very well for underlying demand. What makes Arwana extremely exciting is that it's a very cheap stock. It's trading on just about 10, 11 times PE. It's going to grow about 30% this year. Now, and if you compare it to a very close peer, and I'll show you on the platform, its closest peer is a company called Kajaria Ceramics, which is listed on the Indian stock market. Kajaria Ceramics has a $2.6 billion market cap and trades on 28 times EV to EBITDA and 48 times PE. Kajaria makes about $40 million of net profit. If we compare that to Arwana is not very far behind. It's got it makes about $34 million of profit. So, not 40, but 34 to 35, but it's trading on, 14 times trailing PE and just 10 times forward. And on an EV EBITDA basis, it's even more compelling. So when we compare it to regional peers, Arwana is extremely cheap. It's very, very dominant. It's the 9th largest player globally, and it's certainly a name that can do extremely well over time. It also happens to have a net cash balance sheet. So there's a lot of safety in owning this name. Just one risk to be aware of. Arwana continues to build capacity. And you can see that on the chart on the right-hand side. They've continued to expand over time. Now, once every 6 or 7 years, you have a down year when it comes to demand. And during that year, the margins for the business fall and the share price falls. Typically, that's a great time to own the name. But look, if you can sit through that 1 in 7 years, you're actually owning a name that's a great compounder, has huge potential for re-rate, and as I mentioned, is one of the world's leading companies in its space. Just a reminder, you can ask questions at any time or even at the end, but we'll continue to move through the ideas in a sort of rapid fire way. So the second idea today is China Everbright Environment. The ticker is 257 Hong Kong. This is a mid cap. The market cap is just under $5 billion US. And as you can sort of read from its name itself, you know, this is a stock that's linked to the environmental sector in China. It's covered by Osbert Tang, who is one of our senior China analysts based in Shanghai. And Osbert has actually spoken about the environmental sector as a theme in sort of late last year. So we're sort of circling back. The stock has actually done decently since that time, but we're quite excited about what this year has in store. So what does China Everbright do? They provide environmental protection services. They do that in the form of consultancy, but they also, you know, build and operate plants for people. Last year, we are expecting nearly 30% growth in profits. And we are sort of fairly confident in that because the first half numbers, the company grew about 28% and gave very decent guidance. We'll find out in results next month. Importantly, the cash flow of the business is starting to improve. Historically, they used to have problems with sort of working capital and cash flow, but that is steadily improving. So on last year's numbers, the stock is trading at about a 6.5% dividend yield, which is quite good. Now, going forward, the outlook for environmental services business is very good. This sits squarely within the 5-year plan for China. And we're seeing evidence of that every single month when we see China report its green finance numbers and also the special purpose bond issuance numbers. And these numbers are on a structural uptrend, and that continues to flow through down to companies that are exposed to this type of business. This is a very cheap stock. It's on 4 times PE, and it's below book value, despite the fact that it's profitable and the profits are growing at a very healthy clip. So again, it's one of those names that is just slightly below the radar of most institutions, but it's nice, it's liquid, it's investable, it's just under $5 billion, and it fits in with all the right thematics as well. I'll move on to the third and final idea for today, which is Kirin Holdings. This is a large cap. It's a $15 billion market cap company. It's listed in Japan. The ticker is 2503JP. And it's covered by Oshadi, who actually has his high conviction idea for the year. So a lot of us on this call today would be familiar with Kirin because of its beer business. I think it's a great beer. They do very good dry beer. But in addition to beer, they also produce soft drinks, food products, whiskey, as well as pharmaceuticals. They sell that in Japan domestically and also in the overseas market. Now, Kirin has underperformed the Topix index by 46% this year. And it's also underperformed Asahi, which is a very, very close peer, by about 40% over the last 2.5 years. The ratio of Kirin's share price to Topix is now at a 30-year low. So that in itself is very exciting because you're looking at extremely depressed levels for such a large cap. Now, there are 2 reasons for this underperformance. The first is a bit of weakness in the overseas markets for Kirin. Now, that is not limited to Kirin. You know, peers like Asahi had a very similar market environment. The second and more interesting reason is that Kirin owned a beer company in Myanmar through a JV. And due to the recent issues in Myanmar, it it became a bit of an ESG overhang for Kirin, where some of its largest investors wanted Kirin to dispose this JV, take a write down, and only then would they own the shares in Kirin. Otherwise, they might even sell their stake down. Now, this was a very big overhang on the stock, but the good news is that the Myanmar JV has been ended. The asset write-off has been done. All of this happened within the last 7 to 10 days. And from here on now, the company will grow at a CAGR of at least 11% between 2021 and 24. Meanwhile, the food and beverage business is going to improve profitability over the same time, which means that this is trading on about 9 times PE 2 years out, with a very visible, stable EPS CAGR. To top it, the company has also announced a 50 billion yen buyback program, which we think they will execute on, especially given how depressed the price is. So you're really buying the stock together with the company. Given the current market environment as well, consumer staples like Kirin are the right place to be in. And you guys know, telcos and staples thematically have been good contrarian value longs that we've spoken about in the previous forums. So with this, I'm going to end today's forum. We're going to leave the chat open for a few seconds in case we've got any questions coming in. But if not, you guys know you can always post the questions on the Smartkarma chat. Every week we bring 3 decent ideas, in fact, high conviction ideas. Some of these can be thematics too. And we try and make sure that you understand the value and the proposition of Smartkarma, as well as the wealth of information and ideas on the platform through this 10 to 15 minute session. Thank you very much for your attendance, and we look forward to discussing ideas with you next week at the same time. Cheerio. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.